2021 was a record year for the IPO market, both globally and in the US. More than 1,000 companies IPO'd in 2021, raising a total of $317 billion. The biggest IPO of 2021 took place in the US, where the electric vehicle manufacturer Rivian raised almost $14 billion. But after the record-setting pace of initial public offerings last year, more recently, in the first half of 2022, the IPO activity dropped sharply, and essentially stock market IPOs went from boom to bust. So is this necessarily a bad thing? Well, in this video, I will argue why the decline of IPOs may actually be a powerful stock market indicator, giving us a clue about the future expected performance of stocks. So whether this is a positive or a negative sign for stocks will be discussed in this video. And so without further ado, let's get started. Alright, hey there, my name is Rivian, and let's start by quickly defining what an IPO actually is. Well, put simply, IPO stands for Initial Public Offering, and it describes the process of a private company becoming public by offering and selling shares on a public stock exchange for the first time. And thereby it allows the company that is IPOing to raise capital from public investors. Next, let's take a closer look at the IPO data available to us. So as I already highlighted in the intro of this video, the IPO market essentially went from the best of times to the worst of times, as the number of initial public offerings has essentially fallen off a cliff in 2022. As this fact set graph shows, 1,073 companies IPO'd in 2021, raising a total of $317 billion. Now contrast this to the first half of 2022. So far, only 92 companies IPO'd in the USA, raising a total of less than $9 billion. And as this chart here that shows the quarterly IPO activity illustrates, the peak was reached in Q1 of 2021. And if we look at the number of IPOs on a quarterly basis, the drop in 2022 becomes even more apparent. A similar phenomenon can also be observed at the global level. Global IPO activity reached an all-time high in 2021 with more than 3,000 IPOs, which raised more than $600 billion. In no previous year, the number of global IPOs broke the 2,000 mark or was more money raised. And even though this graph only covers the first 3 months of March, we can see a similar decline in the number of IPOs globally as witnessed in the USA. And this is also backed up by more recent data by Ernst & Young, who compared the first 9 months of 2022 to the first 3 quarters of 2021. So what is driving this massive IPO slowdown? I think there are 3 main factors at play here that are depressing the IPO activity in 2022. First, one should highlight that in 2021, we almost certainly saw a crazy SPAC bubble. SPAC, what is that? Well, it stands for Special Purpose Acquisition Company or companies. A SPAC is basically an empty shell that is already listed on a public stock exchange, but it's a company with no operational activity. And its only purpose is to acquire another company, a private company, and with the help of the acquisition, it makes the private company a public company without going through the somewhat complicated process of an IPO. Now, if we look at the data, it becomes very clear that the SPAC boom is now officially a thing of the past. After peaking in Q1 2021, the number of IPOs by SPACs retreated in the final 3 quarters of last year, as this PwC chart shows. And as highlighted by CNBC, during the first 6 months of 2022, the numbers slowed even further, and not a single special purpose acquisition company was issued in July this year, as the market slowdown turned into a screeching halt. The reasons for this decline in SPAC activity are quite simple. First, there were significant regulatory headwinds, and secondly, investor sentiment turned very bearish in 2022, and there's quite simply no longer the demand that there was in 2021. And this brings us to the second reason for the IPO slowdown. I've just mentioned the bearish sentiment among investors. Of course, this is not only related to the number of SPACs, but more broadly, IPOs in general are of course also affected. In fact, the US stock market suffered its worst first half of a year since 1970. And as of October 6th, the S&P 500 is down 21% year to date, as the Fed and the central banks around the world are aggressively hiking interest rates in an attempt to tackle surging global inflation. Add slowing economic growth, a recession that is on the horizon, the continued threat of further COVID-19 related lockdowns and shutdowns, as well as the continued geopolitical tensions we are witnessing in Europe and also in Asia. And so it comes as no surprise that investors are very careful at the moment, avoid smaller, high growth and/or unprofitable stocks and turn to safer, more established and more profitable alternatives. Also, business owners who consider to IPO are going to choose a moment in time when their business looks very great on a fundamental basis, and thus will be able to raise a lot of capital for their business. And of course, an environment that is characterized by multiple economic headwinds and uncertainties is not ideal for an IPO, as many businesses will wait until the general investor sentiment turns more favorable again. And then finally, the decline in IPOs in the US is certainly also attributable to the pullback in Chinese IPOs on US stock exchanges. Most of you are probably very well aware of the regulatory pushback that Chinese stocks listed in the US have received over the last 18 to 24 months. Two of the biggest headlines last year were the delisting of DD Global from the New York Stock Exchange, as well as China demanding education tech companies, for-profit education tech companies, to turn into non-profits. And the fact that the SEC, a US oversight agency that is responsible for regulating the securities market, is tightening the disclosure requirements for Chinese companies, well, this is obviously also putting a stop to IPOs by Chinese companies in the US. Now, with all of these interesting data points out of the way, why is this newsworthy? Well, low IPOs are actually a sign of stock markets finding a bottom. If we take a longer term view, we can see that a similarly low number of IPOs could be observed in 2008, when the stock market bottomed during the great financial crisis. That's quite interesting, isn't it? And when I conducted my research for this video, I actually came across a very interesting indicator, the IPO boom bust bottom indicator by top-down charts. What this graph here shows is the development of the S&P 500 and the rolling quarterly number of IPOs relative to the total number of publicly listed companies. And as you can see, historically there's a correlation between a boom in IPOs and bull markets on the one hand, and low IPO numbers and stock market declines or even market bottoms on the other hand. Whenever the number of IPOs was getting very close to 0%, this was a sign that the stock market bottom was close. Please note, however, that this indicator is far from perfect, and you obviously shouldn't make decisions based on this indicator alone. There are multiple instances where the percentage of new IPOs relative to already listed companies went really low, but the stock market continued to go up. Now, if you are interested in another fundamental stock market indicator that attempts to predict future market performance, well, I recommend you watch the following video next. Take care.